大家好，我是大龙. Hello everybody else, I'm 大龙. So I'm gonna talk 3 topics today. First about this past week. Second one about the next week and how the market is valuing the election. And the last one is the recommendations of the stocks. Okay. So first we start about this week. We closed this week almost not too much changed. The market is just go up and down. Like last week, and then we see some earnings and we still have 3 more weeks. Okay, banks earnings are revealed this week as we expected. Like Morgan Stanley was pretty strong and then increased like around like 3%, and it will go up more. So they have really good investment bank portfolio. They also do retail too. They started that recently, but they're gonna get like stronger and stronger. They have one of the strongest balance sheets in the banks, so they're pretty good. I think we saw the bottom at the banks stocks. Because they were a lot of liquidity problem before in this pandemic process. And they have to save some money for the possible loan losses, and like credit loans or personal loans, they have to keep some of their cash for the future losses, and also they get like extra regulations from the government, so they couldn't create too much revenue. Also, don't forget it about the low interest rates, so they couldn't create like too much revenue in the past 2 periods. But I believe we arrived kind of bottom for the big banks, and then they are getting better and better their earnings. So and the good thing is most of them have like getting stronger balance sheets, and then they save enough money so far, and so good. They did pretty good stuff. So I think starting from the next year we will see some appreciation in the prices of the banks, because I believe they will start to paying like dividends, increasing dividends. Also, they're gonna start issuing the stock buybacks like Bank of America and Wells Fargo, I believe so. So we will see like some movements on the banks starting from the first quarter of the next year. They are all the banks actually looks like the discount value right now. When I look at their book values, all of them like under 1, 0.6, 0.8. That means they are pretty cheap. So you will like to consider that to put them in your long-term portfolio. Also, we saw this week the retail sales revealed that there was a big increase because I think the customer confidence is coming back, and as well as the economy is recovering steadily. So I think we are in the right path. It will be better and better. In the retail section, I will be like direct recommendation to you guys. Target and Walmart, both of them like strong business structure, good balance sheet, and then they kind of use this pandemic process to reorganize their corporate structure, also business structure, and then they did pretty good. They start increasing. I think they will have like a long path ahead of them. They will be like keep going up. So I highly recommend it, Target and Walmart with the good dividends for the retailers. Okay. Another thing, warning, I wanna talk about it. The Fastly, like the growing, one of the multiple growing company last 6 to 8 months. We see like almost 30% decrease the stock value because of the earning expectations didn't met. But when I checked the earning expectations, the market was expecting around like $73 million, and then they come up with the $71 million. So I said, like, really, like $2 million short, and then we see 30% off. It shows kind of these kind of stocks, like how manipulative they are. They are dangerous. Many of my followers asking me, should we get in? When it dropped 30%, I said, I'm like, hold on. I think we're gonna break down to the 8 and 90. Thursday, Friday, it broke back in 30 and 90. So I think it will go lower 80s. I will be start buying it around like 70 because it's like highly volatile stock, highly not stable base for the middle to long term. So I will be like keep checking that. Fastly is not the only one. There are like many other companies. How are we gonna find out those? Like, well, you're just gonna look at it, do your own due diligence and research. Last 6 to 8 months, if the company multiple like 8 to 10 times, and then they don't even make any revenue or like earn like positive earnings or profits, and also if you don't understand what the actual business is doing, so it will be the possible the next one for the big drop, because we are in the earnings season next 3 weeks. So expect the unexpected. So if you have some like good gains in those kind of fast growing technology stocks, I'm expecting some sell off. So you can cash out a little bit, keep the cash on the side, okay, and get prepared. So about the next week, again, we will be waiting the stimulus package, but I believe it's already priced in, as I said last week. So unless there's a surprise and agreement or something this week, we're not gonna get the good news. So we will be hanging on the same place, and the market wise and the movements up and down, 2 steps forward, 1 step backward. So another thing that I want to talk about it, let me check my notes. Again, be careful about those overvalued, fast growing tech stocks, okay? Because these institutions are moving like more dividend play side for the next year portfolio, because the policies are not clear. Which side wins, the market generally care about the policies, not the politics. So it's not clear right now. So there is still like dark clouds. That's nothing sure. So they kind of institutions want to keep themselves like and the investors like more safer on the like dividend plays, okay, which will be those like maybe like on the retails, as I told you, like Walmart, Target, manufacturing, some oil companies as well, and then strong balance sheet, strong dividend companies. If you have questions, you can ask. I will also answer that. Finally, I want to talk about what the market say about the election. So I made some research how the market is valuing before the election. So I come up this numbers. It's historically proven statistics that if the markets are up previous 3 months right before the election, 98% the existing president will be win. And if the markets are down previous 3 months before the election, and the opponent party will be win. So I believe in this scenario that the market will be actually right now like priced in the Trump victory. But again, still the policies are not clear. So they're kind of what they want to choose for the next year. They want to be like a little bit more like protective to switching to the strong dividend stocks. Okay. And also I want to share another thing. So how will it affect if there's a Trump victory? How will it affect to the market on the next year? So I believe we might see some sharp sell-off either before election or on the first quarter of the next year. So which will be 8 to 10% index correction. It's almost every year or every other year we see it. It's kind of an healthy pull-up process that recently we saw it in the September, late August and September. So it's actually needed, and it's a really good opportunity to adjust your long-term portfolios. So that's why keep some cash on the side, okay, and then be selective okay, when the right time comes, so you can get in and then get some good companies with the higher possibility to increase next and following years at a cheaper price. Again, retail, production, oil, manufacturing industries will be the main target about those. And last thing I want to talk about, many of my followers like telling me, "Oh, Dalong, you don't recommend any short or middle term." Well, honestly, I can. It's kind of risky because in those short and middle term tradings, you have to like timely execution is everything. So if I recommend like a company, you buy it, and then if you miss the opportunity to execute the trade, and then highly possible you will be blaming on me. So before I was a kind of protective on the favor of the followers, but I see a lot of people asking me, so I'm gonna start doing that too, short to middle term, based on chart analysis. So we will try to do that too, to honor some people. So obviously many people are on the new on the trading, so they don't have the basic investment logic and the patience and the time. So they want like quick results right away, and then they are trying like options and other sophisticated tools. Well, I mean, I have been in all these process. I highly suggest to read like more basic investment books, try to follow up with me or maybe other people too. Try to get like more middle to long-term investment. That's the best way to do it. I give you an example. First investors of the Tesla around like 4 to 5 years ago, this year they already made it like 10 to 12 times, some of them 15 times more their investments in 4 years. So it's better than buy in everyday trade. Less stressful, buy it, let it grow, and if you find like some good dividend stocks, you will also getting paid every year. Okay, you will also have like less tax problems after the first year. I mean, the long-term investment means you will pay less tax, so it's also another benefit. So that said, I will be giving some short-term ideas as well. Okay, but all risk on yours. I want to remind that. Okay, so I think that's all for this week. Keep following and Redbook, WeChat, and YouTube. Okay, any question you can share with us, positive or negative, all kind of criticism. We will be open to make it easier for you guys to understand and make money together. Okay, 下次见, bye.